Hello students, I'm Dr. Pandran Nayak, Principal SVS College Bantwal. Let us go ahead with one more problem in the computation of total income as a part of assessment of companies. Already we have solved two problems. This is the third problem. This is the profit and loss account of Suryadeva Company Limited for the year ending 31st March 2020, and along with the profit and loss account, some adjustments are given, additional information is provided. Okay, first one is general expenses include 3,000 towards municipal tax and 7,000 on repairs paid in respect of staff quarters which are let out in the interest of business. See, you have got one item here, rent from staff quarters. Now, there is some confusion or differences of opinion as to whether it should be taken as business income or it should be taken as income from let out house property. If the quarters are let out to the staff in the interest of the company, good interest of the company, not with the intention of merely earning the rent, then it should be taken as business income. But if it is let out with the intention to earn rent, that is the main objective, then it is taken as income from let out house property. But here very clearly it is mentioned that staff quarters are let out in the good interest of the company. Therefore, this income is taken as business income. So all the expenses which are connected to that, it is given general expenses include 3,000 towards municipal tax and 7,000 on repairs of staff quarters. So these are part of business income. So no question of adding it back. That will not be taken as inadmissible expenses. On the other hand, if staff quarters are let out with the intention of earning the interest or earning the rent, then it is taken as income from let out house property. In that case, these expenses relating to the staff quarters should be taken as inadmissible expenses. But here there is no such problem. Then depreciation allowed as per income tax rules 75,000. Here, if you look at the problem, let us see. Yes, depreciation is debited with 70,000. 70,000 should be added back, and 75,000 should be deducted. Add 70,000, deduct 75,000. Investments were brought, it should be plural, investments were bought in January 2016 and sold in March 2020. So here, how long these investments were held? The thing is here, they are held for a period more than 2 years. That means that is long-term capital asset, and profit arising on account of that is long-term capital gain. So that is the intention of giving this information, to find out whether it is short-term capital gain or long-term capital gain. So it is long-term capital asset, and profit arising on account of the transfer is long-term capital gain. Welfare expenses include 10,000 spent on family planning amongst employees. So as far as family planning is concerned, deduction is 100%. Entire amount is allowed. If it is capital expenditure in connection with the family planning, then it must be spread over 5 years. 1/5 should be written off every year, and the remaining should be taken as disallowed. Well, here entire amount is allowed, 100% is allowed. Interest includes 6,000 paid on loan taken for the payment of income tax liability. So here interest has been given 42,000. Of this, interest on loan taken to repay income tax or payment of income tax liability. Income tax is disallowed. Similarly, interest on loan is also disallowed. So this should be added back. Now look at the items of profit and loss account. Opening stock, of course, it is there. Purchases, okay. Wages and salaries, unless otherwise stated, is allowed. Administrative expenses, yes. No other item relating to that allowed. Then contribution to recognized provident fund is allowed unless otherwise stated. Selling expenses are allowed. Interest, I told you already, interest on loan borrowed to pay income tax liability is disallowed. Underwriting commission, this is taken as preliminary expenses, part of preliminary expenses. So 150 is allowed, the remaining amount is disallowed. Of the 15,000, 1/5, 3,000 is allowed. So remaining 12,000 is disallowed. Next year again 3,000. That way, at the end of 5th year, entire balance will be written off. General expenses, okay, 21,000, and all these items are allowed. No question of adding back. Welfare expenses includes payment towards family planning, expenses towards family planning, that is allowed 100%. Depreciation, add back and deduct what is allowed under section 32. Penalties are not allowed. GST paid is allowed. Income tax is not allowed. Wealth tax is not allowed. General ledger is transfer to general ledger is not allowed. Proposed dividend is also not allowed. These are the disallowed items, inadmissible expenses. And look at the items of credit side. So these are okay. Rent of staff quarters. This is allowed. This is taken as business income. On the other hand, if you take it as income from house property, then it is disallowed. I mean, that should be deducted. Excluded. Premium on issue of shares, that should be deducted. Then dividend from foreign companies, this will come under income from other sources, so it should be deducted. A gain on sale of investment, this is a long-term capital gain because there is an adjustment, it is held for a period of more than 2 years, deducted. Refund of GST is allowed, part of business income. Refund of income tax is not allowed. Income tax is disallowed, so refund of income tax is also disallowed. Yes, so that's about profit and loss account, and other items given as additional information. Computation of business income. Net profit as per profit and loss account is taken as starting point. Inadmissible expenses. Underwriting commission, I told you. Out of 15,000, only 1/3 is allowed. The remaining amount is disallowed. What is remaining amount? 1/3 of 15,000 is 3,000. 15,000 minus 3,000, that means 12,000 is disallowed. Depreciation should be added back, and then what is allowed, that should be deducted, that is 75,000. Penalties are not allowed. Interest on loan taken for IT payment, income tax payment is inadmissible. Income tax is inadmissible. General reserve, proposed dividend, these are all inadmissible. So 3,28,000. And incomes relating to other heads, premium on issue of shares, dividend from foreign company, gain on sale of investments, refund of income tax, then what is allowed as depreciation under section 32, these are all deductible. As a result, 1,60,000 is the deduction. From this one, if you deduct this one, you'll get 3,14,000 business income. The computation of total income. Income from house property is absolutely nil. Business income we have computed here, 3,14,000. Long-term capital gain, it is computed, you did not calculate. So it is 10,000. Income from other sources, dividend from foreign company, 10,000. Total is 3,46,000. That is called gross total income. Deduction under section 80. So no donation, nothing. So no deductions under section 80, nil. So gross total income and total income remains the same. The computation of tax liability. So you have to find out whether any income is there where special rates are applicable. Yes. Do you have short-term capital gains taxable at 15%? No. Do you have long-term capital gains taxable at 20%? Yes. Then do you have yes, casual incomes like lottery income? No. So only long-term capital gain on which you have to apply special rate 20% comes to 4,400. It should be 4,400 for your information. It is not 44,000, 4,400. Okay. Then tax on balance. So 3,46,000 minus 22,000, not 4,400 for your information. Many times students deduct 4,400 from 3,46,000 on the remaining, they calculate the value. No. 3,46,000 total income. Of that, long-term capital gain you exclude. then you'll get 3,24,000. On that you apply 30%, then you'll get 97,200. A surcharge is not applicable here because total income does not exceed 1 crore. Therefore, surcharge are not taken, otherwise add surcharge. On the total of tax plus surcharge, you have to calculate health and education cess at the rate of 4%. So it is 4,064. As a result, total tax is 1,05,664, which is rounded off to the nearest 10. Therefore, 1,05,660. See the notes here. Underwriting commission being preliminary expenses, it is allowed only 1/5 of the total amount. The remaining amount is disallowed. As the staff quarters are let out to the employees in the interest of business, rent from staff quarters is taken as business income. Further, expense of municipal tax and repair expenses included in the general expenses are allowed as business expenses. I have already explained, that's for just I am reading. Amount spent on promoting family planning among employees included in the welfare expense are allowed 100%. But I told you, if the amount spent is capital expenditure in the promotion of family planning, then it must be spread over 5 years. 1/5 should be taken in each year, and the remaining amount is taken as disallowed. As the investment is held for a period of more than 2 years, okay, profit from sale of investment is taken as long-term capital gain. Here it is held for a period of more than 2 years. Interest on loan taken for the payment of income tax liability is not allowed. Similarly, refund from income tax is also not a business, an item of business income. So, that is, I have solved the problem. Thank you very much.